Welcome to day 83 of me backtesting my way to success. First trade was a loss, and the reasons why I entered were equilibrium from the swing high to the swing low, this 2-hour fair value gap, and then I entered on a impulsive move slash breakup structure away from the volume area that was inside of the golden zone. So the impulsive move was right here, and my stop loss was above the fair value gap with a little breathing room. My take profit was at the swing low, right here. And the reason as to why I lost, I think actually it was because, as you can see, there's this 4-hour fair value gap that fits perfectly with the golden zone, but it was already used right here. And so I was kind of looking for more fair value gaps or order blocks that fit with the golden zone. And I think that was a stupid thing to do. I think if like the higher time frame confluence already get used in the golden zone, then I think my Fibonacci is placed incorrectly and price is going to go out of the equilibrium range, take out this swing high like it did, because price, as you can see, took out this area of liquidity and then it reacted with this volume area. And yeah, and then it went down. So I guess this can be led back to impatience and maybe even just me not thinking everything through before entering a trade. So basically impatience. And yeah, that's it for the first trade. Let's just see how the next trade goes. Next trade was a loss, and the reasons why I entered were this daily breaker block that you can see right here. There's also a weekly fair value gap, as you can see right here. And then there was this, I kept the AMD cycle in mind, so this is a clear consolidation. I thought this was a manipulation into this very strong volume area. And then I entered on a break structure, which was right here. Stop loss below the volume area with a little breathing room, and take profits were the volume area of the consolidation right here. And also the high of the consolidation, which was also a volume area, as well as a 1-hour fair value gap, but I was placing the TP more because of the volume area. And I got stopped out, and the reason for that is because, yes, I know I have a couple of volume areas marked, but the reason as to why I lost was most likely because of the, as you can see in the weekly and especially also in the daily, a lot of a movement to one side. And in the weekly, of course, you can see it as an impulsive movement. And so I placed my equilibrium from the swing low to the swing high. And there was this golden zone. I did see it, but I thought that maybe because the golden zone was below the weekly fair value gap, weekly order block, I didn't find no confluences right here in this golden zone. And so I thought, okay, because of the AMD, maybe price right here uses or reacts with the weekly fair value gap, daily breaker block, volume area, and then goes at least to this volume area, and then maybe goes down further down into the golden zone. But I was wrong. Actually, price just did it right now. Price went down just this instant. And I think what I could take from this trade is that higher time frames hold higher power. I guess I didn't keep that in mind while taking this trade. So that's that. That's already it for today's episode. We'll see you in the next one.